All right, one of the powers of doing a common size analysis is that you can look at two different organizations and identify how it is that they're attacking the market or how it is that they're approaching profit maximization. In our example, we're going to look at Dell in 2010 and we're going to look at IBM in 2010. So I went and grabbed the financials for IBM. Now you'll notice that IBM's fiscal year ends in December and Dell's ends in January, and that's okay. They're very, very similar. Here I've got information for IBM and Dell for the same year, 2009, 2010, same period, January, December. And I'm going to perform common sizing. So I've already got the first row set up for you here. For IBM, we're dividing everything in cell B12 here by B39, which is, as you will notice, total assets. Okay, right down there, total assets. And then we're going to do the exact same thing for Dell. Now, as much as possible, I tried to match up where the assets are in terms of their different lines for both Dell and IBM. So I'm going to copy these through. You just put your little cursor on the bottom left-hand side, get the little crosshatch and do a double click there. I'm going to do the same thing over here, do a double click here. All right. See if you can do this. And then I want you to take a second and look at this and identify where these two companies are dramatically different. Take a moment. So maybe the first thing I would like you to notice here is that the relative size of Dell and IBM are quite astonishing. So total assets, the total assets for Dell are $33.6 billion. The total assets for IBM are $109 billion. So IBM is a little more than 3 times the size of Dell. There's no way that ordinarily we would be able to compare these organizations, but by engaging in a common size financial, we can do so. Here we go. Now, how are these two companies establishing their own financial makeup? Dell, for example, has 31% of its assets are in cash. IBM only has 11.7% or 11.17% of its assets in cash. Go down to non-current assets, right? IBM has almost 12% of its assets are in buildings, where Dell only has 8%. IBM, 23.75% of its assets are in machinery, furniture, equipment. Dell, almost nothing. Total fixed assets, IBM has 36.32% of its total assets are designated in fixed assets, while Dell only has 13.82%. These two companies, even though in 2010 they were both offering personal computing solutions, the two companies are radically different. IBM has lots of infrastructure. They are an incredibly large company. They have lots of plants, lots of equipment. Dell, a much newer company, has a significantly smaller portion of equipment and plants. Dell takes computers that are put together by somebody else, so they take components and put them together and ship them off. IBM is building computing solutions for not only consumers but businesses, the Department of Defense, NASA. So what's happening is IBM, even though a much larger company, they are engaging in a slightly different part of the computing industry. So for all of their servers and data storage. They need space. They need physical buildings. And so even though IBM and Dell are similar in lots of respects, they both offer computing, IBM is much more different. They're much different than Dell. They've got lots of stuff in buildings, lots of stuff in machinery, much lower percentage of their assets are in cash. Why would Dell need to carry so much cash at this time? If you read the notes section of the annual report in 2010, the CEO identifies that Dell needs to grow by going out and acquiring new companies, acquiring new specifications. They need to really identify growth areas and go out and buy assets. In order to do that, you need to have cash. So Dell is carrying lots of cash on hand. And when you look at the portion of their balance sheet that's designated to goodwill and intangibles, right? Dell is much larger in these areas. Okay? Are there any questions about these things as you go through them? Write them down. Send an email. Identify where your gaps are so that we can address them. We're going to move on to a common sizing of the income statement and a common sizing of a side-by-side income statement between IBM and Dell next.